Yo, scopers, we're back, and today we're going through time frame alignment. In order for you to fully understand time frame alignment, you have to first believe these two things, which is time is fractal and price is also fractal. When I say fractal, it basically means it has a fractal nature. For example, time, right? We have 1 hour, but the hour, what makes up the hour? 60 minutes. What makes up a minute? 60 seconds. What makes up 60 seconds? Well, minis, nanoseconds, whatever you want to call it, right? So there's always this thing of going on where it's external and versus internal. Like, for example, as I said, an hour that will be external, internal will be 60 minutes, right? So an hour, why do I keep saying 60 minutes? Hourly, you will have minutes as hourly being external, minutes being internal, right? And then you could have minutes being the external and then seconds being the internal. You know where I'm coming from? And the reason why these are fractals simply, and why I'm only using these two things, because what do we have at the bottom? We have time at the bottom and then we have price on the right. So these are the two things, and if you don't believe this, you're not going to understand time frame alignment properly. So cool. Now let me move on to the external versus the internal. External versus internal, right? So we said, as I said, time is fractal. What the hell? Time is fractal, price is also fractal. So when it comes to price, we know that whatever happens on a higher time frame, right, it took lower time frames to do that, right? Meaning on a higher bullish structure, there's mini internal bullish structure, and then when that goes bearish, right, when we have a bearish market structure on a higher time frame, we know that in that we had obviously internal bearish structure as well. So now let me show you what that basically means, right? So look, we have, let's say this being a higher time frame, right? Let me just do, higher time frame like this, right? Internally, I'm just gonna make this black. Internally, you're going to have internal structure that does this, right? Does this, and then when we reach here, we have internal structure that brings us down like this, and then when we reach here, we have internal structure that takes us up like this, and then we reach here, right? Let me make this red, not even red, blue. So let's say daily, this is the black is daily. We could have hourly doing this, right? 4 hourly doing this. The hourly is basically doing this, right? Cool. And then we could also have, within this, we could also have substructure as well, like, because time is fractal. So let's say this is hourly, minutes. Now let's do seconds. Seconds could look something like this. Something like this. You get the gist, right? That basically all of these things in between. Obviously I didn't draw it properly because it's not really aligned, but we will show you I'll show you an actual charts, but I'm just using this as an example. So you see that on a higher time frame we went up, right, and then we came back down, mitigated, and then went up again. But on a lower time frame you might get caught and you might think, oh, we're bearish now, we're coming down, because we're at a higher low, made a higher high, and we broke it, so we're coming all the way down. And then you will get caught on the wrong side of the market, and then what happens, price goes up again, right? And as it's going up, for example, let's say we get here, price starts doing something like this. One sec, because this looks too clean. Let's say price starts doing something like this. Do you get where I'm coming from? And that will also be in correlation with this. Why? Because obviously higher time frame we're bullish, we can't mitigate something, and then we're making a new higher high. But when we get here and we see these lows being formed, you get caught on the wrong side of the market and the market goes higher. It's the same thing as when the market is bearish. If I was to invert my chart, same thing when the market is bearish. You see the market bearish from this point to this point, we can't mitigate, come back down again. When we're getting down here and you see this up moves down, you're thinking, oh, this is demand, because why, we have up move here and we're coming to retrace, and then price does this, right? You have to know how to align the market structure and align it with time, and that's what I'm going to show you here. So I went through the theory is not really that much of a deal. So now let's go into charts and actually show you this. So I'm going to start with Bitcoin, as I'm on Bitcoin already. Let me show you what I mean. All right, cool. So let's go. We're currently on a weekly, right? Weekly, what are we looking for, right? Weekly shows us the directional bias, or weekly and daily, right? Weekly and daily are basically the same thing. One thing about time frames as well, you have to realize that, remember the same thing I gave you with time. You have an hour, and then you have minutes that make up the hour. You have minutes and you have seconds that make up to make the minute. So don't think, oh, if we're on an hour, right, you know that, bro. I mean, if we're on a daily, you know that, bro. Ideally, daily, right, is internal structure would be the hourly. Think about it, right? Daily, the internal structure will be the hourly. Hourly, the internal structure will be the minutes. Minutes, the internal structure will be the seconds, right? But we can categorize them in a way where obviously we're not going to be looking at seconds charts, you know where I'm coming from, and daily we're not really going to be looking at all the like hourly things, but we can categorize them. So for example, daily and 4 hour, we can keep them as one for directional bias, right? So let's do that. What is the directional bias here? Directional bias is, let me just remove all of this. Directional bias is we went from this low, right, to this high, right? And this high, the reason why it was a high is because we can all see that it broke this portion here. So directional bias right now is we're bullish, right? We're bullish until we reach here, right? Bullish. Let me just put this as green. We're bullish. We can see that. If we're bullish, let's mark our demand zones. Let's find, not even demand zones, let's find the internal structures, right? So this is the 4 hour, daily. Let's go on a 4 hour now to maybe make the internal structures clearer. Okay, cool. Let's see, what do we have? We have a low. Let me just make these a bit smaller. We have it, you know, I'll make it this big because, flip it now. I'll make it this big. Yeah. So cool. We have internal structure, right? I want to change the color to blue. Right, so we went from here. Where was the last low that broke this portion here? The last high that broke this portion here. It was this portion here, right? It was this. Okay, cool. Then we have that one. Then we have this one. What broke that? It was this, right? So we went from here to break this portion here. But wait, what broke this? It was this, right? So we went from this portion here and broke this portion here. So we had this to here, right? But if I look at it properly, it's on a 4 hour. Let me zoom in. I'm not zooming in, that's why. If I zoom in, let's read it. We had this point which came and made this low. We went and broke it. Where's my thing? Yeah, we went and broke it here, right? We broke it here. Then what happened? We just kept going up, because after we broke it, let's say this portion here. That's the reason why I'm trying to use this portion here to show you. But let's go on the 8 hour. 8 hour make it clearer. Perfect. 8 hour, we had this low. What broke that low was this portion here, right? So that was the breaker structure. I was right. We also have this portion here that broke it. So our daily is actually here as well. But obviously we went flying through it. But we broke it right there, right? Not to confuse you though. Ooh. The breaker structure obviously was here, right? It was there. Let me see. Broke it here, mitigated. This, yeah, we broke it there just to make it easier. I'm using cycles right now, but we'll get into that later. But anyway, we broke it here, right? Okay, cool. And then what happened? We kept going up. You see how we have internal structure going on here? This is on a 8 hour, right? So if I go on a thing, you will see this low, this high, right? And then we broke it. We broke it again. What led to that? It was this one here. It was this one here, and then what did that do? Break this one here as well, and we kept going, right? We're bullish, we're going up. So cool. These are the internal structures. 1, 2, 3, 4. Why am I counting all of them? It's just the points, but the swing points basically. You have one that made it here, broke this portion here, right? After we broke it, in fact, we didn't break it. This one broke it. Let me show you something. This one broke it. You see how this one broke it? So it was this low that went and made this high. So we ended up mitigating it, did that decisional, right? And kept going, right? Because overall we're going up here. But let's say we went, cool, we reached all the way here, right? Let me just mark out the internal laws again. So we went from this portion here and went and broke that portion there, that last supply. So we went from here, right? And then what did we come and do? Mitigate this portion here, right? We came and mitigate. So up, down, then up again. What led to that high? It was this portion here. But let's read it properly. That high was there, so ideally it was around this range here. We went, this is the low, but this is like the point, the decisional point that actually led to the break. So we went from this, we went from that portion there to then do that, because we have an internal range within that. So internal will be this, and then this, and then this, right? But this portion here led to that high being broken, this portion here being broken, right? Cool. Now let's go and check. We haven't mitigated yet, so we need to come back and mitigate. What happened? We went up, came down, right? Mitigated this portion here, because this was before the breaker structure. So this internal, I don't know if you can see it, but this little internal structure here is what broke this high. If let's check it again. Yeah, I think so. Did it break it? I think so. Wait, what was it? High is 1119979. What is that high? 1198. Okay. 11999198. Okay, cool. So it wasn't even that broke it, but this is basically just break and retest traders anyway. But so it was this portion here that actually broke it. So let me just remove this and say that we need to come back and mitigate, and we did. It became, this is not a mitigation, it just went up to zang people, right? And then what happened, we came down again to actually do the mitigation on this portion here. So we went up BOS, right? And then we come back down again, but coming down again we use internal structures, didn't we? So we went down, internal was this, in fact from here all the way to here, mitigate again, came down to here, and then we reached this portion here, which was where we broke. Then that portion we had internal structure to do it. Look, we went up, down, up, down, up, down, up, finished it off, broke structure. And then what do we do internally on the 8 hour? We came down, broke it, came up, broke it again. So we used this portion here as demand, oh sorry, supply, came down again. But what is this one doing? Remember, this didn't mitigate. Obviously this is a trap, but according to market structure this also made a high. But you have to realize where the original like break structure happened was here, not this one. So this basically became one main push, right? That's what this basically done. This did not mitigate the demand zones, so it was basically just liquidity. We came and took that liquidity, tapped into the actual demand zones that led to this breaker structure here, and then what do? We go and replicate this leg, and then go from here, from here to here, right? Again, revealing that there's internal structures. When we hit this point, we broke structure right here, right there, right? What actually led to this? This is where it started. Internal, we went up like this, came back down, came back down to mitigate, right? And then do the next leg, right? So think of it this way. Damn, I drew so much crap on this, but basically look, daily, if we look at it, if we go on daily, one sec, even weekly for example, right? Because it's daily and weekly that we look at for directional bias, then we go lower. But yeah, you know, I made a mistake. It's daily and weekly that we actually look at for direction. So direction, we know that we're bullish because we went from this low to this high break, right? And then we came down, mitigated, and we went up again. Then what happened? We came down, as you saw, we mitigated, made the next high, and then we came and broke it. So right now, what stage are we in on BTC right now? We are in a retracement phase, right? So we've broken structure. We're in a retracement phase. What's BTC likely to do? We're likely to use internal structure to do this, right? Creating trend line, mitigating some sort of demand supply zone here, and then make his way down again, right? And maybe reach these zones here. That could be a possibility. Or we could just go all the way up, reach this portion here, because demand is so strong, we don't come down, we just do this, induce, and then carry on going to make new highs. We can do that. But this is the directional bias. We know that we're bullish from this point here because it broke this portion here, and this is simply just liquidity, but it's still a breaker structure on a lower time frame like daily, right? So daily, what could happen is what I was showing here. We're meant to respect, we have to respect this area here. We can come up like this, respect it, and then come down. Maybe we break this. If we break that, we're likely to go and tap into this portion here, right? Because that's what the external directional says we're bullish, right? And we have reached a demand zone. This portion here is what led to this break. So we have to be careful with that one there. Let me just delete everything here. So we have to be careful with that one there, because why? Directional bias has more weight than anything below. So now I've shown you the directional bias. Let me just I want to go, you know, should I do another chart, or should I stick to BTC and go through all of them? So we've done directional, which is weekly, right? We know that we're bullish. For example, from here to here, we're bullish. Okay, cool. Daily basically tells us the same thing. It just shows us the structure clearer. So anything between the daily and the weekly, you can go 4 days, for example, right? It will look the same, right? You can go 5 days, right? It will be the same, because it's that range that we're in, that range of time from the external that we're in, because we're in the block of daily. Daily, basically days, we're using days. So days, this is the structure of a day, right? Then we can go on the hourly, because the hour, we know that the hourly make up the day. We have 24 hours in a day. You don't hear people saying minutes in a day. We have 24 hours in a day. So next we do is we go on a hourly. We can go on, obviously, we can go on 4H. 4H will show us our market structure. And if I look here, what is 4H telling us? For example, again, I'm going to do the thing again. As I said, we went from this portion here, right? Breaking this high, right? Cool, we broke it. What low led to that? It was this low here. Oh, it was Damn, it was this low here. Ooh, why is it doing this? It was this low here that took price here, and then we came down again. We see how we didn't mitigate 50%, so still with a main push. So it started from here, went here, decisional failed, right? And then we have the extreme down here somewhere. Then what happened? We can say it mitigated here because it went and broke this high. So look what it's saying. Daily, we knew it was bullish, right? We find the demand zones relevant in the 4 hour, right? So we can trade. We basically you find a market structure on a daily, right? Not to confuse you. Find the market structure on a daily. Oh, damn. Find market structure. What the hell is going on? Find market. Whoa. Find market structure on a daily. All right. Find market structure on the daily to weekly, which is we're bullish. Okay, cool. Now I come back down to the days. The day shows me that, okay, cool, where was my last low before a high was broken? This low was the last low before my high was broken. You can say this as well, right? But that is internal. This point was it. It was ideally is all the way here. This is it. We went from this point to this point. That's the higher time frame. So that's the range we're in. I want you lot to do it like this. Range we're in, you mark it out, and you know that is a bullish range. So when we come to the discounted portions of it, we're likely to trade higher. All right, cool. Daily, that's what we see. So we know that we're in a discounted area, right? We get likely to go higher, right? Because it's a bullish range. So now let's look at the lower time frame. Like, let's say the hourly. The hourly and the 4 hour is basically the same thing. It's just, as I said, the hour will show you more detail. The lower you go, the higher the detail, if you have it all in context. So look. So now look, on the daily, on the hourly, we know that 4 hour we came from here to here, tapping into this portion here. So that's what market structure is right now. We're bearish, right? But then we know that when we tap into here on a higher time frame, externally we're bullish. So we're likely to go and break this portion here. Now let's look for confirmations why we might break this here. I'm sure you can all see it. Trend line, easy. But coming off a point where it's valid for us to go up, and we have all these traders to target. Why? Because they think we're bearish and they're drawing a trend line. Hence why when we got here, see how we tap the trend line and then we fail because we are coming off this portion here already. When we was here and we touched the trend line, see how we kept moving. Now we've met the point on a higher time frame. You need to be aware of this. This is why I will say that you have to be aware of what the external is doing. When you understand the external and then you pair the external with internal, you're just looking for traps. Traps is this. We're coming off this point here. We need traders to believe that we need to go and break this. Who are those traders? Trendline traders. We're targeting that. Okay, cool. So this is internal, and then now let's go on. So 4H to obviously an hour. That's what we're looking for, a market structure that we can trade for the week or for the day, right? So for example, here, what do we have? Hourly, we know that obviously we're bearish, right? But if we're bearish, now we've broken this low, this high, right? This lower high basically that made the lower low, tapping into here. We've broken it. So guess what? We started a complex pullback to go and reach these supply zones, and we know that the first supply zone will be ideally here, right? Ideally here. Let me mark it out. The first supply zone will be there. Supply, where you at? The first supply zone will be here. So if we're going up and we've broken this is our first indication that we've started a complex pullback. Because remember, this is the first move on a higher time frame, right? Now we're doing internal retracements to then reach here, and then we reach here, we're meant to do the next move, right? But this next move could fail, but we know that from here we still need to do the next move, right? And come down. How low can we come? We might come and tap into this portion here and then carry on going. We might do something where we might come all the way down here and test these lows, right? And not break it and then go higher. Do you get where I'm coming from? Is that you just have to understand that from this point here, we're likely to come down. We're more likely to come down. But at the same time, you have to realize this is on a, let's say, on an internal time frame to this POI. This POI is a higher time frame, so it has more power. So we know that this is going to get broken. However, how are they going to break it? Are they going to entice people to get in and then break it, or are they going to break it straight away? And in this case, we broke it straight away, but we still haven't broken a high yet. Do you get where I'm coming from? So we've gone further into it, broken structure. And that's another structure thing as well. So now let's look at the hourly. What are the internal structures? We know that we had this low from here. Oh, this is the last previous low, right? Ideally here, but obviously this is the refined point of interest. I'm just using this, but it's from this low, right? Made this high, we came down, mitigated. So yeah, it's right, this low. I didn't even see that, but we had this low, right? That actually led to us meeting this supply. So this low, we're likely to come test it. We're likely to come back down like this. Ooh. We're likely to come back down to test this portion here and then go. Or we could just do something like this and then break this and then do something like that and go. It's just how we don't know how it's going to move, because remember, external is like the movie, right? External is the movie. The movie is, bro, we're bullish, right? The scenes, you're gonna have some downs before the end of the movie. Like the movie, that maybe the main character might have some, come from some bad, like, I don't know how to explain it, some bad moments before they can fully enjoy their aim, that their mission, basically, before they can actually achieve their mission. So for example, in this scenario, we know we're bullish. However, the internal the main character in the current scene we're on, he could be having a bad turn in his outcomes. Maybe he's trying something, it's not working, so he's going to have a low moment. You can come from, but that low moment, we know that, bro, the movie, when we read the title of the movie, it said bullish, so we know that eventually they're going to be up, right? But it's where they're going to go up from. And to me, is this portion here, or we could break this portion here and come all the way and test this portion here, and then give another move. And we know that. Why would we need to go up? As I said, the movie says we're bullish. On a weekly, we have this low that made this high, right? And then on the hourly, on the daily, not even on the daily, on the hourly, let's just say, we have traders who are thinking that, because it shows in the trend line that they have here, right? And we know that we can target them. And worst case scenario, we target all of them and reach this portion here. But even that will break it, right? Because obviously led to a new low, but still, compare this to the power of the higher time frame, the bigger picture. The movie says we're bullish. So when this, let's say the character got here and the character got shot, right? And you think, yeah, the character is gonna die. By the end of the movie says it's bullish, bro. It means that my man's gonna have a wonderful life. So you know that at the end of the movie, you're expecting a wonderful life. It's just that we don't know how it's going to happen, and that's the best thing about the movie. Because if you knew the movie, you wouldn't watch it. But you know that you assume the outcome because of the title or certain things within it, right? And we know that this currently, the title is, right, we're going from this point here to make a new higher high, possibly, right? But we don't know if that's what is going to happen at the end of the movie. We just know that that's what the movie is based on. The movie is based on that at this point here, we're going up. So internally, every scene might show us that we're going up. Or scene-wise, at the beginning, it might look like we're not going up and we're going to go down, just to entice more viewers, just to entice more, I don't know, entertainment. Think of it as a movie. Just think of it as a movie. The full movie and the scenes being each bit, like minutes wise. It doesn't matter what minute it is. But now, I know I'm probably going around in a long time, but you need to understand this. That's the reason why I'm going on about this, because when you understand this, it will save you from being on the wrong side of the market. But anyway, cool. So we have the direction is we're bullish. Hourly, we now have internal structures showing us that we're bullish. And remember, like, internal, the seconds make the minutes. So seconds are important. Minutes make the hours. So hours are important. Do you get where I'm from? And obviously the day is important as well, because that's the official, like, that's the full picture. And the day and the month also is important as well. But remember, the lower you go, that's all the building blocks that makes the higher one. So in this term, we know that we're bullish, and we now have internal structure showing us that. So now we buy with the internal trends. Do you get where I'm coming from? You buy with the internal trends. Buy with the internal trends. You see what I'm talking about? Like here to here. See how we don't break this low here? Then we go. Let me zoom in. You see how we don't break this low here? So we make this low here. We don't break it. This low made this high, right? And we know that high could have been made, right? Because we're coming off a point where we know that it's gonna make a new high. So we're gonna made it. So that high, yeah, you're thinking, oh, it's hit a fair value. I don't trust this demand zone, wherever it is, right? You have to trust it, because in a higher time frame, we're bullish, so you can trust this. Do you come from? And when we touch it, look, we make a new high. See how we don't break this low? Yes, we come deeper into the demand zone, because we're at this portion here. Well, we've broken this portion here. We're trying to come down. This is all liquidity as well, right? But we're not breaking it. And then what do? We have from this point here to this point here. That's a change in lower time frame. If I go here, look, let's go lower. So we're currently on an hourly, yeah. If I go on a 30 minutes, yeah, to the 15 minute even, right? What do we have here? We have this portion here. We have a low, right? This high, this one made a high here, breaking this portion here internally, right? Then this portion here went and broke this portion here. So we have a main push, right? Main push. we have a complex pullback breaking this portion here, meaning that we're bearish, right, until we reach the demand zones. Look, we come down again, this lower high makes a lower low into this portion here, further into this demand zone here, and then what happens? We break this. What does it tell you on a daily? The movie tells you it's bullish, bro. So why are you going to sell here when you know that this point here is a scene where we're likely to go up? We haven't broke. If we broke this, different story, but we haven't broken it yet. So you know that this portion here, when we tapped it and done this, yes, we didn't break officially the high, but we had internal shift in structure, and the main movie tells us we're bullish. So if you see the character now winning, we're getting small wins, you know that, yo, they're likely to win overall at the end of the movie. You gonna come from until they reach the point, which is this portion here that we're looking for. So at this portion here, you could have bought, because why? We have a new one, shift, mitigation, expansion, and you see it rip because there's nothing here for it. There's no resistance. Look, there's no resistance. FUG, right? There's no resistance here, bro. The next resistance will be here. Hence why price is just flying like this. You can come from, and then when it flies like this, you might just start having price do this. Internal structure taking us there. We're not going to come back and mitigate this portion here anytime soon. You can come from, and that's how you want to view price. So basically, it goes like this: direction, weekly to daily, right? Market structure, we use H4 and H1, right? See how this H1 market structure look from swept liquidity, main push, right? Why did you see how the demand zone held? Because it's the hourly and full hour. So these are the market structure we use when we're trading within the week. So before the week starts, you're not thinking, oh, this is the supply you're waiting to trade. For example, let's just say, for example, when price was here, right? When price was, let me put on replay and I'll explain something. For example, when price was here, right? You're not thinking, yeah, I'm gonna wait until price gets here before I buy. No, you can catch a trade. What's the trade? The trade is, look, let's look at the 4-hour time frame. 4-hour time frame, that's what we're looking for, market structure. Have we broken this low yet? No, we haven't. So currently we have this low that made this high, right? Ideally this high. Then we came, in fact, ideally this high. It's gone from here to here, right? And then what have we done? We've come back down. What has it even done? In fact, it's gone and broken this structure here. Oh, this structure here. So we know that, bro, we're going to mitigate and then go higher. Maybe we might not break it, but we can still mitigate at this portion here and then maybe come down, because we know that, yeah, or we could just break it and we can know that, yo, we're in like retracement fully. So meaning that this cycle is no longer valid because it's internal, and the external one from this portion here to this portion here is the one we're looking for, and the demand zone of that would be down here. So we're looking for price to come here because we've broken this portion here. So now let's see what happens. I don't even remember what happens though. I don't know if we went up. Did we go up? Alright, cool, 1 sec. Delete all of this. Alright, cool, look. So we hit it, and then yeah, we this didn't make a low. So it's not the low that made, it's not a supply that you're gonna come from. Ideally the supply is actually here, right? Or here, this portion here, this portion here, and this portion here. Alright, so let's see, do we reach any of them? Internal structure, what does it tell us? This, look, this is the low that, this is the high, the lower high that made this low. So ideally that's also supply. I'm not qualifying them yet, but this whole point is supply, because ideally this is the candle. You see this wick here is what broke this low, and we know that we're retracing, right? We're retracing to meet this demand zone here, this demand zone here. Why that demand zone? Because it's an internal structure. Demand zone. Why this demand zone? Because it went from this point here to this high here. Well, obviously this high here, and let's factor that in, and then we've come back down. This, we haven't made, like, from here, this is all one main push. You have to realize that, because the demand zone here has not been tapped. When this got tapped now, we went up, and then we came down and we didn't break it. What's the current thing? We went from here to here, breaking all of this. So we're still bearish. Do you get where I'm coming from? So when this comes down and it doesn't go and make another high, or it takes this high a little bit, right, we're expecting at least this portion to hold. So when that don't hold, because this is one that actually led to the high, that internal structure has been broken, and we know that, bro, well, this is bearish, so we're likely to take these lows, and we know that, pair that with the official structure, this is where the demand zone was, so it makes sense that we come down here. And then when we do, hence why you get this move here, where we're not breaking lows no more, we're struggling to break lows. See how we went up, right? We haven't broken nothing yet. In fact, we mitigated the supply zone, right? And then what do? We came down, broke internal structures, but the external one, this current one, when we tapped here, this current low, you see how we haven't broken it yet. Then we go up, down, mitigate the demand zones, right? Because this is a liquidity cycle, because we've taken this point here and all the other ones, trend line and everything. So we have a liquidity cycle starting, inducement, build up. So we have the build up, inducement, right? And then mitigation, expansion, taking all of this liquidity out, then tapping into this supply zone, right? So we have liquidity, supply zone, mitigation. What's likely to happen? Remember, this is currently bearish. We went from here to here, so we're not bullish yet. If we broke that, I would have meant we're bullish, but we're not bullish yet. So what happens? Price breaks this, so now we're bearish, right? And what's the bearish point? We have this portion here that came and broke this low here, and we know that this will be a supply zone, right? And we also know that obviously taking this here, there's a lot of liquidity that got taken. And if we look properly, what do we also have here, right? We know that this point is what actually broke this portion here. Like, look, this portion here is what actually broke this portion here. So ideally, the internal range, another internal range we have is this point here that went and made this official BOS. This was just another one that made, right? So it's like, think of it like we went up, down, mitigation, and went up. And I said, remember, causation, because we broke this supply, which was heavy, right? So when we broke that, this was the one that actually paved the way for the buyers to break this high again, which we did here. So these buyers that got in here are correlation, so we're likely to take them out, and we come and take them out here. So this could also be liquidity to take us up further, to mitigate this portion here, because you see how this was basically like a one leg break, if you think about it. Why? Because we haven't come and mitigated it. So this becomes an internal range from this point, taking this liquidity to come break this portion here, these lows here, the official one that got broken, right? So we know that, okay, cool, if that's the case and we could have a liquidity cycle, this could fail because there's a trend line, and the official one is actually here. This is the decisional that actually broke this, that started it, and then this is the extreme. So let's see what happens. Let's see. Okay, cool. Now that narrative changes now. Why does it change? Because after we took that liquidity was not powerful enough, and then what do? We went and broke this one as well. So that liquidity, when we took the liquidity here and we broke this one here, it was not valid no more. Why? Because if it was valid, we would have went up and we would have went up and went there. But because, think about it, people thinking, yeah, like obviously liquidity has been taken, right? And we're in some sort of demand zone here because it led to the breaker structure. Remember, this is a decisional one, and look at it, if we read it, there's no, it was like mini internal structures that done this. So this is likely to fail because it's trend line. It doesn't always fail, but sometimes, but you just have to know that it's likely to fail. That's why you wait for confirmation when we tap it. There was no confirmation, so it failed, right? And you know that the next one is actually this zone here. This is the valid zone because it took liquidity and then went and changed structure, breaking past sellers when sellers took control here from this portion here to this portion here. So you know that, bro, when we get here, right, before going to these demands or supply zones, we know that, bro, we need to trap them. So look, hence why there's trend line, because when we broke this, people understood that, yeah, we're bearish, and they're selling, and the market is letting them do it. Look, that's hence why there's a trend line. But it knows that when we reach here, we're going to target all these sellers because they think, yeah, this is it, it's falling, right? And then this is what we're at right now. We have this internal structure going on to go like this and target all of this trend line, and maybe the first target is this portion here. When we reach here, if we don't break it, we're likely to come down again and mitigate again, and then maybe go up. But until this portion is broken, we're still bullish. You have to realize on a higher time frame, we're still bullish. It's just that the internal time frames haven't matched that yet. This is Bitcoin. Let me go and do something else.